Well, hello everyone, and welcome to the latest edition of Conversations with a Pro Trader. I'm your host, Greta Wall, and I'm joined today by David Prince. And David is the leader of T3 Live's Inner Circle virtual trading floor. He's a full-time trader, has tons of experience in the market. He's been on this program before, so thank you for coming back today, David. All right,
Happy.
sorry. So my first question for everyone on this program is how would you grade your week of trading so far? So we'll get to the news of the day in just a bit, but give me your grade on your typical school scale, an A to an F, and why.
Sure. I would grade it prior to after the close. I would grade it a B because I'm a believer you can only work with what you have, right? You can't just create your own trades, and the climate dictates what we can do. But after earnings, I'm going to go with A minus
Okay.
because we had a little uptick on some of our idea flow. So B, A minus after the close today.
All right. So you mentioned the earnings after the close. So let's just get right into those. Both Netflix and Tesla reporting after the close today. We'll start with Netflix because the huge market reaction is happening there. The stock up over 12% last I checked, right around 12% after a major beat on subscribers. I think is kind of the driving force of that surge. So give me your initial reaction to the report and what you saw with the stock, what you expected, how that went, etc.
So a lot of what we do is, everyone has a favorite stock. I'm sure as a whole, the market's probably more consumed with Tesla, but I saw if there was to be a large move based on the recent movement of the stock, Netflix would be the one that was priced so negatively, it would probably provide the most upside because price action pre the print is half the game, as I try and teach people in Inner Circle. So long story short, we've been short and really focused on being short Netflix since a conference appearance they had about 4 weeks ago when the stock was 420, 425. And they basically said the ad model in no uncertain terms was going worse than expected. And stock tanked, hit a low today, pre the print of 344. I think I was shorting it like at 420 and we were buying puts. The reason I'm saying that though is it kept us focused on it because it's done nothing but go down since. And the street is so slanted in one direction that often when the street is all on one side, you get a little bit of green shoots or some good news and you have an outsized move. So I did not take earnings. I didn't take calls. I didn't take stock. What I told Inner Circle and friends was simply that Netflix is the type of stock that we can trade after hours and do just fine. It often has its biggest moves. So long story short, saw the numbers. Like you said, facts are, if you've been around, Netflix is not about, the sales. Netflix is not about earnings. Netflix is about subscribers. End of story. Subs 5 million and change, and I think the number was eight something. So clearly, whether it's password sharing or whether it's the ad model, something is actually working better than people thought. It was priced to go up about $30. We were able to buy the stock 365, 367. I pointed to the 21 day at 373, 373, 375. I said, if it gets over that, we really could have a monster move, and then said, people are so slanted in one direction. Ultimately, my target after hours, if it got nutty, would be 388. And I see we're a little higher right now. So thank God we're able to be involved. 365, 367. I don't still own it. I wish I did. And it's 389 now. So A minus on because of that. Basically better than expected. And the stock was priced for miserable news. So even a little bit of good news goes a long way when everyone's on the same side.
When it comes to really big outsized moves like this happening right after a report, we still have the conference call to come a little bit later this evening. How much do you expect this to change by the open, maybe tomorrow morning?
So every stock, if you're old enough, they kind of have a template how they do things, right? Netflix has one that they basically don't give you guidance, right?
Right.
So because of that, there's only so many things, or let's say pitfalls you might fall into. Now, they can talk about the ad model being less than at hope. They could say password sharing was maybe not quite as good, but you're probably not going to get like a, oh my God moment and have a complete reversal. So in this case,
Hmm.
I told everyone there's some risk, of course, with the call, but not your typical risk you might see with a company that's actually going to give forward guidance, since they don't.
Hmm. For a trader who maybe missed this after hours move, are there any kind of points that you price points in the stock where you see might be a good spot to get
Absolutely.
into this trade tomorrow?
Right. So Netflix loves the 21 day. When it's
Hmm.
over it, it really can be powerful. That stands at between 373, 375. I'm looking at you, not the chart, but I'm right.
Hmm.
And wherever it'll be within that deviation tomorrow.
Hmm.
So what I often do, especially on earnings, especially for someone that enjoys risk, is I play what's called the day after trade. Now,
Hmm.
here's basically, I look forward to establish a base after the open, and then take out the highs if I'm bullish and be long, or take out the lows. There's one caveat with that. If Netflix opens up 30 tomorrow, I'm not interested in buying. So
Right.
I actually would buy the very first dip into 375, because I don't believe traders that are exact make money. I'd actually probably be buying, based on the fact that it's 388 right now, probably be buying 380, 377, looking to have a full position at 375, right?
Okay.
If we got that low, because that's where the 21 day is. And I think it's going to be back at 400 in the next couple of weeks. And that's
Hmm.
how I play. Now, if someone doesn't want to have to stare at it all day, they might just go out a week or two, excuse my dogs, and buy $400 calls on the first dip they see tomorrow. But I think 375, 380 offers a good buying spot.
Okay, great. All right. So the other big earnings report after the close today, of course, was Tesla. As you mentioned, this is kind of the market's favorite stock. It's the star of the stock market in many ways. A miss kind of across the board, but the stock is still up after hours, about 2% last I checked. Give me your reaction to the report and explain maybe that move.
So
Like, why is the stock up even with bad news all across the board?
I think because the market wants it to be up. I mean, is the most straightforward answer I can give you. The other
Mm-hmm.
thing is, it was maybe priced to go up, down over 10 today, down recently, I think in the last month, about 15%. And I think, we were at over 300 not too long ago.
Mm-hmm.
So partially it's where the stock is. I think if the stock had closed today at like recent highs were about 268 to 278, I think the stock would be down, frankly.
Mm-hmm.
That's my guess. I think ultimately it's going to come down to the call and Cybertruck. I don't like to pretend I'm an expert at anything I'm not. I am so not a Tesla expert. I'm in it all the time. I trade it. But I told everyone, look for like a few basic things. Cybertruck is, this is a cult stock, as we know. I'm not saying it's not an important company. I'm not saying they haven't changed the car industry, but it's an emotional stock. So it moves off of emotion. The next greatest event that's emotional to Tesla investors, and I might be one if I decide to be, is the Cybertruck. So it's going to be about
Mm-hmm.
sales in the fourth quarter. Are they going to be, first off, are they going to be realized, and are we going to see cars on the road, or is this going to get pushed back again? And then probably people are going to point to price cuts and how long will this go on, and will margins continue to get squeezed? He can kind of paint a positive picture if he says, hey, listen, I've done the cuts I need. We're in a powerful position, and I think we can take our foot off the gas, excuse the pun. And maybe that's the worst it's going to get in terms of margins right now. And he did back the delivery number. So it kind of tells people, hey, most likely demand's still there. So I
Mm-hmm.
get why it's going up. If I had to guess, it's probably 240 again before it's like two. I think a recent pivot high was like 256. I'm going to guess it hits 240 before 256. But it'll be up to him. He's a magician. He's the Barnum Bailey of our generation. So he'll figure out something, and the stock will go higher because he puts on quite a show.
Hmm. I think an interesting thing with Tesla is that the stock is traded much more like a tech stock than, say, an automaker. But obviously, the company is an automaker, and so really high pain points in the economy right now, especially with things like auto lending, with rates out of control, uh, lenders pulling out of the auto lending game altogether. How much do you see some those things possibly
So you just
impacting
asked
Tesla in the future.
a logical question on a stock that doesn't trade based off of logic, but it's a great question. So someone on the
Mm-hmm.
chat said, is this like the worst quarter? This is the kitchen sink. Someone just asked me that. And I said, why? Like, rates are going higher. It's more expensive than ever to buy a car unless you're paying cash. The Federal Reserve and yields are doing everything possible to crush the economy and eventually make people lose their jobs, to make cars even more unaffordable, even though rates are higher,
Mm-hmm.
and competition keeps heating up. So why does this have to be the worst? It might actually get worse.
Mm-hmm.
Here's the problem. Tesla doesn't trade off that. Tesla trades off charts and emotion and this crazy Cybertruck that's coming out and Kathy Wood's $3,000 price targets. So I try not to get caught up in that until the market cares enough. And I'll give you an example what I mean by that, and we won't get too long-winded, but there was a point where it broke 200 and the
Mm-hmm.
margin decreasing. That story was first taking hold. I liken it to when the market used to go down a great deal during the tariff battle with Trump and China. If you remember, the market would go down 1,000 points. Then more news would come out and be 700 points. Then more news come out and be 300 points. Less and less effect.
Mm-hmm.
Sometimes Tesla just gets used to things. So if another event happens and people say, wow, Tesla as a company is really changing, that might take over. But for right now, they're getting adjusted to, oh, margins are shrinking and everyone's going to come back to the same thing because they want to own the industry. They don't want to give up market share, and they're going to have sell through that far outweighs the margins decreasing because they're going to sell that many more cars. So that's going to be everyone's opinion until it changes. And one day, if it changes, great. By the way, it's like NVIDIA. Nothing really changed with NVIDIA except for people's opinions and emotion the past couple of days. So for right now, everything you're saying is right. I don't know if anyone cares enough for it to be in the stock. Hopefully they
Yeah.
do. Things easier.
Yeah, great points. Okay, so just a reminder for everyone who's here with us live, this is a conversation between David and myself, but also a conversation between you guys and David. So be sure to submit your questions in the live chat. We have a couple going. So that in the second half of this, I'll go through all those with him and ask him all of those. We want to make sure we're talking about the things that you guys want to learn from David, not just the questions that I've prepared for him. All right, so David, if we're zooming out on Q3 earnings season as a whole, these are our first kind of two big reports for the market. You know, we got the banks; those are big, but this is our these are kind of our bread and butter reports. What are your expectations for this earnings season?
So I've been telling people I am literally more of a trader. I'm not typically a trader. I'm more of a swing trader, money manager, but I'm more of a trader right now for the past month than I've been in about a year, right? I am literally looking day by day, week by week, moment by moment. So the setup that everyone knows, right, ad nauseum, is that we've had this percentage move in the markets. And based on history, starting as of like 2 days ago, the market is seasonally going to go higher. And it's done it 9 out of 10 times in the back half of the year. Everyone should play that. The problem is, I keep saying the one thing the market's done this year that's actually made me a lot of money is it's faded the masses, meaning every move everyone assumed was the easy way to go simply didn't work, starting with the very beginning of year when you were supposed to own oil stocks, so they probably went down. Bank stocks, because of interest rates, they went down. Don't own tech, tech goes up. So I have to wonder, when everyone is so confident in the back half of the year, stocks going up while there are two wars going on, while yields are hitting highs, if it's as simple as that. But that's the playbook. Within that playbook, I'm trying to find my best risk reward stocks or indices and look at them on almost a weekly basis versus, hey, this is where I think the market is in 2 months. Because I can tell you, I don't know. Usually I have a gut feel. Right now, I am more neutral than I've been in a long time. There was a point last week where I got uber bullish because I saw a couple of specific opportunities where I was like, the odds are on my side. I'm going to get paid if I handle this right, in my opinion. And today, after getting paid on some of these opportunities, I'm like, it's more even. I don't know. There's certain stocks I like better than others into earnings, but in terms of the market, very neutral.
Okay. So I would guess that you are a more active trader when it comes to earnings season versus when we're not in earnings. So kind of explain your earnings strategy, how you approach stocks as they're reporting, etc.
Um, I look for what's crowded, what's not crowded. Half the game is, I like to say, where the stock is priced pre the print. How has the
Mm-hmm.
stock performed? Is it a crowded long? So best way to walk you through is just factual evidence on last quarter as we're just entering this quarter. So I don't have a lot of earnings bets on yet. I didn't really play the financials. But last quarter, I really didn't like and told people I'd either be short or not take Apple and Microsoft because I thought they were priced for perfection. Had nothing to do with valuation as much as the stocks at highs into the print based on the news we knew. And I looked at Google trading at a reasonable valuation, still far off highs, and the ad market holding up and the economy being pretty darn strong, and them figuring out AI, and thought that really is my best bet. I'm not going to pretend to have a superior edge in earnings because no one does, even the top analysts don't. But you can at least take some evidence and try and put together a picture that you think gives you a little edge. For me, last quarter, that was Google. So I played it. And partially it was because where the stock was pre the print, right? So that's a lot of what I do. And then I try and figure out how much risk do I want to take? Do I want to marry this and be long the stock? Or is this something where I'm looking for some alpha and I really just want to do it via stock or calls, which is what I do into an earnings print 90% of the time rather than being short or long the stock. So I know what my max risk is. And that's primarily what I do is I'm trying to look for where is the upside, whether it be short or long, not priced in. Where is it a little less obvious? So that's, and in fact, I'll give you an example. There's a group of solar stocks that everyone hates. And I don't know if I'm positive on them, but I do know that if First Solar or ENPH actually have a halfway decent report, you're going to get Netflix all over again. Whether or not they report it, I don't know. But what I always say is I'm like, if you only do a few of these and you really feel you know what you're doing, you only need to be right 20 or 30% of the time and you're going to be way ahead. Kind of like Netflix today when it was still up and after hours like 15. I'm like, you can buy it 365, 367. It's up 20 points now because it wasn't priced for that type of move. So that's kind of what I'm doing pre the print. What is not already known by the market or at least bet on where everyone's on the same side. And sometimes, by the way, I'll miss stuff because it'll look too obvious and then it just goes up another 100 points. But I tend to avoid those and look for, I don't want to say what's at lows because that's not a way to invest, but just what's less crowded. And that's
Yeah, that totally makes sense.
and also knowing
The trend we saw in the second quarter earnings season was exactly what you pointed out with Netflix. Stocks that were beaten down heading into the report, if they had any type of good news, had those monster moves. Stocks that were rallying into the report, even if they had good news, it just wasn't good enough. Based on Netflix and Tesla, do you expect that to continue this season?
Absolutely. There's a lot of different stocks. I'll give you an example. Like Google was making new highs of the year just last week, right? So they're going to really have to report. But then there's other sectors, like I was just talking about solar, which were the leaders in 2022 that are all on lows and look awful. So I think there's going to be a lot of that. What's priced in, what's not. Google's not expensive, right? Meta's not expensive, but they both trade way better than 90% of big cap tech stocks. So they both have some pressure to report decent earnings. If there's something amiss in either of them, they're not going to trade well. They'll like open up 10 and then be down 5 type of print. So I definitely think it's another quarter of, is the stock priced either for perfection or at least for really good news, and the news was just okay. So I am so not like all of FANG's going higher this quarter, all of FANG's going lower, all of solar got to own all of software or not own software. There's a really strong bid right now in all of these software security plays, Palo Alto to CrowdStrike, you name it. And they're trading better than pretty much anything else, right? If they don't report well, there's going to be an issue. So it's going to be a quarter where the stock is pre the print is going to be 70% of the game, in my opinion.
And before we move on from earnings, I we do have a question about Netflix, and so I want to get to that. Reese or Rice, sorry if I'm saying your name wrong, but he asked, when you're referring to the 21 day on Netflix, are you talking about the exponential or the simple? And do you have any preference on intraday versus daily? Intraday, yeah, versus daily.
Yeah, when I'm using the 21 day, it's something I want to rely on beyond 5 seconds. So it's always, unless I'm scalping intraday, it's always the daily, not the intraday. And I use SMA, which I know a lot of people use EMA. SMA has worked for me for however long I'm in this, 28, 29 years. So it works for me. So I do it. I always like to tell people there are guys I can read a chart pretty much
Mm-hmm.
better than most, but I don't even know what the half of the terms are. Like I always joke around, like, is this an inside fiber on the niner with the triangle? So my point is, I am not like a certified technician or anything. I just know how to read them. And the long story short is, SMA works for me. I know guys who swear by EMA. So I always say, don't take SMA because it works for me. It's always worked for me. So I'm not going to change it.
Yeah, all right, that makes sense. Okay, so on top of earnings, we've gotten a lot of Fed speakers this week, so that's been another kind of headwind for the market, kind of trying to figure out what the Fed's going to do. In the midst of this, Treasury yields have been on an absolute tear. The 10-year topping 4.9% today for the first time since 2007. So, do you agree with the recent sentiment that the bond market has kind of done the Fed's job for them, and they will not have to hike again this year like they laid out at their last meeting?
Yeah, I think 1,000%. I think there are people feeling pain out there. I think this really just does change buying habits. I really do
Mm-hmm.
think when mortgages are at 8%, housing is not just going to continue. So I absolutely firmly believe and feel like I can see it. I think a lot of people in the market are part of that 1%. But I think there are a lot of people in the world that finally are feeling it. And I always like to say, people forget, like, how much money was made between crypto, between the fact that our government was sending us checks during one of the craziest market booms we've since the year 2000. So my personal opinion is it just took longer to spend that money. I think most people are
Mm-hmm.
out of that extra money. I think they have credit cards that now have interest rates that they're not accustomed to paying. And I think we're going to see a true difference. I get it. It's taking longer than people thought. And I don't pretend to be an economist, but if you really think about it logically, sometimes excess takes a little longer because people had a lot more money than they've ever had, right?
Mm-hmm.
So I just think it's taking longer to filter down, but I think it's starting to do its job right now. Absolutely.
How do you explain the recent move in Treasury yields? I mean, if you can, like, it's wild.
Yeah. Here's the way I explain it. So in my years in the business, I've learned anything that looks like that, right? It just looks
Mm-hmm.
like that for years and years and years. When that starts to happen, you don't know how high it can go. So the
Yeah.
longer that line is, if it's that long, and I know this is simplistic, like almost like absurd,
No, this is
childish,
great. You're
but
good.
when you really have something that's so compressed for so long and then you break out of it, and by the way, you can expand upon that and make it gold, or Bitcoin, when it broke and it was sitting at like 5 to 2,000, the move it had. So something like rates that have been zilch for so long breaks out of a base like that. And then finally, there's one other thing. You know how long the Fed was aching to talk about inflation? Like that was the favorite thing. They're like, please let there be inflation. Like the
Mm-hmm.
world was like, they were like, let there be inflation because they wanted to have some normal, not this whole slow growth. So the one thing you learn is once inflation gets out of the bottle, it looks a lot like that chart I gave you. There, like,
Mm-hmm.
you can't look at many countries and be like, oh, inflation got out of the bottle and they pulled the lever and then it went back down. So I can explain it by saying, once it gets out of the bottle, it's tougher, and we're coming off the longest, most compressed period of zero interest rates in the history of this country. So it's, if you really think about it, not that illogical. It was a lot more like smart people. I don't claim to be one of them, but they say this really well. They're like, the last 15 years was abnormal. This is normal.
Yeah.
And I
Yeah.
believe they're 100% correct when they say that. The sad part is 80% of traders out there don't understand that because they weren't around.
Hmm.
But I think that was normal, and this is normalcy. It's
Hmm.
just getting there was a vicious cycle.
Hmm. It seems like the housing market has been the last sector of the economy to slow down, even though with rates over 6%, rates over 7%, now rates at 8%, you'd think it would have slowed down a lot faster. Do you think this kind of 8% threshold is the point where buyers are going to pull back and say, I can't, I just can't do it?
So I want to first say, like everyone by now, if you're like semi-read a book or educated, everyone knows the reason, right? We don't have to pretend like, oh, I found out the reason. Everyone knows it's because no one can afford to move, right? Everyone owns an
Hmm.
interest rate, not a home. That's a fact,
Hmm.
right?
Hmm.
Unless you are the 10 million and above person who of net worth that is buying homes in cash, you can't go out and buy a two, three, $4 million house and not pay double what you were just a year ago. That's prohibitive and that sucks. But here's the problem. So no one's moving. Okay, so we know that. So if no one's moving, if you own a stock and it's a biotech and it's $8 and it's halted tomorrow, your account is still going to show a value as if it was $8. In my opinion, and I've been saying this, the housing market's just halted. But I don't think it's really holding up. I just think it's like a halted equity that's not trading.
Hmm.
Yes, again, people in a certain dynamic are trading houses for 20 and 30 million because they don't care about borrowing money. But the people that are not, which is a majority of that market, I think are looking at a halted market. And I've been saying, I think and this is just some dumb theory I have. I don't have evidence to back this up. I actually believe as rates back up, that the market will loosen up, and I actually think it goes down. I just think we have to unhalt the market. And then
Hmm.
the answer to your final question is no, I don't think it'll be affected till we see the jobs market. The minute the jobs market, people
Hmm.
don't want to take a loss and so on, right? But the minute they don't have jobs and they actually need that capital, they'll be forced to
Hmm.
take losses. So to me, the housing market relies on either the jobs market plummeting, right? And then it's game over, in my opinion, or actually rates backing up a bit so people can actually move and be willing to take 10 and 20% losses off of what they paid a year ago. Right now, I just
Hmm.
feel like it's halted and nothing's happening. I know that sounds unusual and I might be dead wrong, just my uneducated opinion.
Well, and personally for me, when I look at the housing market, uh, once rates go back down, the demand is still there. So then competition goes right back up. Prices, you get back into price wars, and so the price, just any type of price destruction we've
That's
seen at
what
this
people think.
point.
What if they don't have the jobs? What if the jobs
Right.
market is
Hmm.
then
Very true.
getting and I rates aren't going at 2%. Like
No,
yeah,
no.
we're not true. It ain't happening. Like for years, people
Yeah.
have to get. So my question is, will they be able to afford to? So I really think the economy slows down. The jobs market is less strong. People aren't spending the same amount of money, and we're not going to have that competition. But we need something to loosen it up. Right now, it's like a halted market, and unless everyone loses their job, they're not forced to sell. Eventually, they're
Hmm.
going to be forced to sell because they don't have a job. So
Hmm.
we'll see.
All right.
But I get what you're saying, makes very logical sense. I just think the
Yeah.
economy slows down and prevents that.
Everyone, we didn't get the recession that everyone was predicting this year, and people are kind of on the fence. Maybe we'll get a recession next year. It's really just waiting on the jobs market at this point to kind of
Now,
catch up with the slowdown in the rest of the economy. So personally, for you, do you see a recession actually happening?
well, I should preface this and say I constantly tweet once a month that if I was a macro investor, I would be homeless. It is a really tough way to invest.
It is.
So
Yeah.
I use my macro thoughts within reason. Example, I'm seeing things slow down a great deal, and I believe we're finally there. And I've been telling people you can't own Win, you can't own LVS, you can't own airlines because of some things I see, but I don't try and look a year out. That is such a tough game. My
Mm.
gut is, like I said, the excess was much greater than we've seen in decades. and it's taking longer to unwind. And yes, we will slow down, and yes, we will unwind, and yes, there'll be a recession, and yes, the office market and corporate real estate that we keep hearing about will finally implode, but the process is taking much longer than everyone else. My gut is next year it does happen. But it's also the law of numbers. Like, I'm making an easy bet, in my opinion, because everyone was a year ahead of me. I remember this year thinking everyone is so bearish, everyone hates tech, everyone likes oil. So in January and December, I'm like, I love FANG. I'm buying tech. So it's kind of an easy call to make, just because I didn't prophesize doom this year. Now I
Yeah.
feel like, yeah, I could see us slowing down. I don't think it's an awful recession, but I think next year we slow down, a minor recession at the very least.
The last jobs report was really hot, but I think there's a lot of caveats in that report that people weren't, the headline
What?
number doesn't show. Yes, we added, more than double the amount of jobs expected, but the number of part-time jobs increasing significantly with the number of full-time jobs decreasing signal that more people in the economy are taking on a second job, a third job, just to pay the credit card bills, as you mentioned, that are interest out of control. So do you think those reports, as they come out in the months ahead, become inaccurate with those types of things happening?
Sorry about the dog. What's that? Sorry about that. One thing I'll say,
Didn't
here's
even
what I
hear
think. You were talking about the Fed speak.
it.
I think, I think, why do we listen to these reports? Ultimately, so we can predict what the Fed's going to do. I mean, that's
Right.
the game. So if you have the Fed talking down policy, which they've been even the most hawkish of Fed governors have been. Can you hear me even with that
I don't hear
lunatic
your dog at all. You're good. Or
dog?
anything. You're good.
So since they're talking things down, people are willing to look past things because they're really listening to them. So I think that will maintain itself, and people look through hot numbers as long as they're within reason, because frankly, Fed governors are telling us, hey, the job's done, we can step back for a bit.
Yeah, that's a great point. Okay, so let's go to some audience questions. We have a few here. Craig asked if you see any swing trade setups. So maybe talk through some of the setups that you're looking at that for swings, what you see in
Stuff
those
I've been
stocks, etc.,
when I'm looking.
or stuff you've been in, what the setup was, how you went through the trade, etc.
So again, I am more of a trader now, but I've been swinging Qs and TQQ for 2 or 3 weeks. I got, is it Craig you said his name was? So Craig, I got very bullish only because I'm old, and I know 90% of the time the day a war is announced, the markets go up. So starting that Monday, I was very long the Qs and TQQ. I also know that it's a more of a robotic type of trade that doesn't really have a lot of longevity to it, meaning it's a reaction, but how long it lasts will be really up to how much the US gets involved, oil prices, inflation. So that was a swing trade up till today when I took profits all the way in. It was on the Qs into 370, and I had a trailer. And finally today I said, into these reports, I think I'll be flat. In terms of where I see value, so one of the most hated sectors that I keep pointing to is biotech. Not a fan yet. I bought a little bit recently to just kind of keep track of it. But my biggest trade in 2022 was actually long XBI in size and long calls in size when it hit 62. I actually think XBI is an awful setup. So are biotechs, given where rates are, because they need to borrow money. But there's a point where they're just going to be endless takeouts, and you have a few things going. First off, you have year-end plays on, I'd say 80% of these biotechs are going to have January effects because they're all trading on lows while the rest of the market's done really well. 2, the chart shows a lot of support down there at 62, 63. 3, forget about the last year or two. If you look at biotech over the past 3 or 4 years, it is down as a percentage like it's a meme stock. I have never seen such underperformance in 30 years of history. So if you're looking for something you can buy and put away and look out 12, 24, 36 months and actually be proud of, I really do believe there is real value on biotech. But I still think we're close to 68. I still think we have but another 10% to the downside. And I might even get aggressive and play it through XBI and Labru when it happens. I am definitely looking at ENPH. I'm hoping I have some calls for earnings because it plays out like Netflix where everyone's to the same side. But end phase plays out like a great end of the year January effect play. So that's something I'll be swinging if all the tax loss selling that I think is about to happen happens. In IWM, I was long swing. It had such a big move yesterday in the type of market we're in. I had calls that went up 40, 50%, whatever it was, and I took them all. But those are areas where I see more value, but I'm not really bullish IWM. I just see value versus some other indices. Long term, I backed a lot of cannabis companies and financed them before going public. I think given the news flow, and I've been hands off cannabis for like 2 years, most people can tell you, but recently when that news came out about HSS rescheduling cannabis as a drug, I said that this has a lot further to go. And we were in MSOS from like 6 or 7, it went to 10. Recently I got long 7 again. I made a half a point and got out. But my point is, I don't think cannabis goes away. I think this rescheduling makes some of these companies like 5 times more profitable, like Green Thumb, than they ever were. So it's kind of the low end, meaning it's not quality, but if there's something you can swing, you can look at some of the quality plays within MSOS like Green Thumb. Otherwise, I was a buyer of, and it's not to show off, but I was a buyer of Meta when it was 88. I trade it now. I own it for a week here or there. I'll get shorted here or there. Am I an investor in Meta here? No. Am I an investor in AMD here? Probably not if we came into the 200 days. So there's not a lot right here. And I can go through that. I mean, financials are getting decimated. Morgan Stanley, 72, 73. Yeah, then it starts to get interesting as a long. But my point is, a lot of things look broken or very bent, and there's not a lot of cheap valuation. And the stocks that are cheap for a reason. Like PayPal's cheap, but PayPal's like almost going away. It's doing so poorly. So I am definitely a little less of an investor swing trader than I've been in many, many months. But ideas come. MSOS was a recent one, IWM, QQQ. As of today, Netflix will probably be on my books for the next few weeks because I really think it'll be very viable on any pullbacks.
I want you to talk a little bit more about that IWM trade. You and I discussed your reasoning a little bit yesterday. So talk about your reasoning, what your strategy was for that trade, like kind of walk us through it and what you were seeing and what made you go long those calls.
So a couple of things were going on. First off, China became a big issue all over again yesterday. When China becomes a big issue, everyone looks to avoid it. China became a big issue because of NVIDIA. By the way, where China's not a big issue is in small cap stocks that are typically domestic plays and not multi-internationals. So a lot of people, I'm a little weird, so I think through things like that. So it was a reason for IWM to go up. But a day before I was looking at things and the rumors were out on NVIDIA for the past week and it's earnings season. And I'm just looking at valuation and I'm looking at the chart. And I love when I miss a move and I see a big gap. Excuse me while I turn this off for a sec. But when I see a big gap that I miss and it gives me a second chance. And I'm coming back. And on IWM, I saw that. I remember I saw a move from 170 to 174 and it retraced the entire move. And I looked at the rest of the market and how things were trading like Meta and the big cap stocks that I'm typically in. I said, you know what? If anything is going to work, where everything's not priced in, where actually I might get paid, it's IWM. And rather than buy stock, if I'm right on options, I can get paid as a percentage much better. But give myself time. So I really believe this can work. So let me put a little bit more real money. And what I mean by that is if I buy a month out, I'm willing to risk a lot more money in options because I trade it more like a stock versus options that expire tomorrow. So I bought the 175s 2 days ago for November expiration, the monthly expiration. I got lucky. I didn't think it was going to go up like it did yesterday. It went up 3 points yesterday, which comes back to the market we're in, wars, yields popping. And I was up like 40%, 50%. And I said, you know what? How the hell? Like, why am I not taking these profits? I don't know what's going to happen tomorrow. We are in a wacky market where there's no real trends. Every time you short something that's broken, it bounces, and vice versa. When you're buying highs, I'm taking my profits. But that was my reasoning. I got in and it went up a lot. Typically, I'll be in these trades for 2, 3, 4 weeks, sometimes a month. This one just worked right away, so I took it. Because we're in,
All right,
again,
great.
a trading market, less an investing
Mm-hmm.
market, my perspective.
Mm-hmm. Eddie asked, based on what you mentioned, would you consider yourself more of a contrarian and mean reversion type of trader rather than trend following?
Definitely not, not even remote.
Yeah.
Most people, no. I'm looking for risk reward, but if you
Right.
understand what I'm doing, I'm the guy. Like some of our biggest trades this year was when Nvidia made that upside announcement and the stock gapped up the 90. I said when it pulls back, it's going to be my biggest position, and I was a huge buyer between 375 and 367. But it didn't make me a contrarian that I waited for a pullback or liking Netflix after the report because it's not priced for it. That doesn't make me a contrarian. It just makes me, in my opinion, someone who can judge risk reward setup. So Meta today, I actually think earnings are going to win, but I don't see a great risk reward to be long. So that's what I'm looking at. But no, I'd rather buy a bull market stock that's in a bull trend, that's above its averages on a pullback any day, and short a broken name into a bounce any day of the week. So no, I'm not a mean reversion trader. I'd be out of business. No, I only know this because I learned that way and did so many mistakes and lost so many millions of dollars the first 10 years doing dumb stuff like that. So not my cup of tea. Occasionally I'll do it. I'll look for January effect plays and so on, but definitely very small part of my business.
Craig, who asked for those swing trade setups, said thank you, and he asked how he can follow you in your trades. So I gave him the info. You run the Inner Circle with T3 Live. He can follow you on Twitter. But explain Inner
One
Circle
thing I like
for.
to say, because you mentioned Twitter, sorry to interrupt,
Yeah.
but a lot of people like do the fluff on Twitter, and I made millions of dollars, and I'm a genius. I don't do that stuff, but I actually put out a lot of stuff I do way in advance. So like it's out there. I take a little pride in that. People pay a lot of money to be in the Inner Circle, so I don't do all of them. But I'll be upfront, say I'm buying this and I like this and this is what I'm looking for. So yeah, occasionally it's right there on Twitter. Sorry, I just wanted to mention because everyone's like,
So
I bought this, and they tell you afterwards.
So for Craig, explain Inner Circle, kind of how the room works, what your daily process is there, the value it brings for traders, for yourself. Sell the room.
Long story short, I run a small fund and I found myself, I grew up with a lot of I'm like the black sheep, right? There are like guys running, I grew up in New York City and the guys running the largest hedge funds in the world. And they're not talking to me during the day. They're my buddies and I'm close friends with them, but they don't care about me during the day. So I didn't know a lot of traders and I would overtrade my account. I'd find myself just getting crazy intraday. And I'm like, I got to find someone to talk to and share ideas with. And someone had mentioned T3. This is going back over a decade ago. And somehow I found myself in Scott Redler's room, and Scott's a great guy, and we've become buddies. We traveled to the Ukraine together to teach some younger traders. So it was a nice place. But it's, I don't want to say beginner, it's just definitely a little less seasoned investor. And I was there for a long time, and it became like a second job to me. Some of it was fun, and some of it was exhausting and taking too much of my time. And after about a decade, and I didn't do it for money. I just like helping people. It's easier than writing a check. It's a lot less painful. So it was fun. And I, help people. But after a while, it got exhausting. I said, what if I did this and then I did it and I charged a lot of money? So only seasoned people that really knew what they were doing, hedge funds looking for idea flow. What if they were all on and I got ideas? Wouldn't that be cool? So that was the game plan. I'm not going to say it all worked perfectly, but it came out pretty well. And now I have like a million guys smarter than me on the chat who some guys run hundreds of millions of dollars who share their ideas. Then we have some smaller people who, are just learning, but it's, I would say a place where you have family offices, larger traders, some really seasoned professionals in all walks of life, from doctors and lawyers to hedge fund managers, and we share idea flow. And it's a much more like, I know most of the guys. I know who their wives are. I know who the wife's husband is. I know who their kids are. I joke around because I try and make it fun for us. They deal with me. I act like an idiot and I'm a jokester. But overall, like we're out to help each other. So it's one of those places where I even get help from friends.
Yeah.
Some of my best friends are now from the chat that I met 3 years ago that have
Hmm.
come to stay at my house. So it's like a family, but there are some no joke serious players on the chat in different industries, and we all try and help each
Hmm. Great.
other.
That's great.
Chat.
So Craig, there you go. There's your pitch on Inner Circle. It's a great room. I'm in there a lot, just listening.
Can I say one
Uh,
thing?
yeah.
I should say that. So I'm always like going, oh, I'm so exhausted, I can't do this. But here's the difference, because a lot of these chats are selling stuff. Here's the one difference in my chat, right? And by the way, for my longevity, everyone knows because they joke around about it that like I'm gonna not be able to handle this anymore and do the type of work I do. But trading is not about stock picking, right? Like I can pick stocks with the best of them, but that's not really what makes people money. It's when to size up,
Hmm.
it's when to size down, it's how to hold winners, it's how to take the loss when you need to. That's the end of the game. It's not stock picking. Stock picking is like the second part. What we do and what I've done over the weekends and what I've done at night is actually not only get to know people, but help them figure it out. Like, what the hell's your problem? Like, maybe you got to read Trading in the Zone because you're so emotional, or you're a home run hitter, or you only have $200,000 in your account and you're buying 1,000 NVIDIA and praying that that's going to save you. And you have to learn how to manage money. We talk a lot about how to manage money and trades versus being stock pickers. And that's
Hmm.
probably where we thrive. So I should say that if I'm selling those, which I'm not the salesman, but that's what we do way better than 99% of the people out
Hmm. All right.
there. Now,
So let's look back at the market. What stocks or sectors are you bullish on, short term, long term, whatever you choose, right now, and why?
sure. Couple that I mentioned. One was I'm looking at an end of the not yet end of the year play, ENPH. I am thinking it's going to
Hmm.
be my favorite January effect play. Ideally, I'd love to own it between 100 and 110, and I think I'm going to get a 20 to 30% move. Earnings are next
Hmm.
week, so it could destroy that plan. But I am so if there's a sector that is going to have massive tax loss selling, because remember, it's been a good year in the markets overall.
Yeah.
So there's only a few sectors where they have all the losses. And by the way, even cannabis went up at one point this year. So if there's a
Hmm.
place where it's concentrated, it's solar. So that's like I am jonesing to be a large buyer between 100 and 110. Earnings are next week. I hope they miss huge. If they don't, I'll have some calls and partake. But that's one of my favorites. Biotech as an investor between 62 and 63, I'm a huge fan. But this is a 12-month outlook, understanding that a lot of these companies are not ready for 8% interest rates, right there.
Right.
However, there's a lot of meat on the bone of some of these companies, and they'll just end up getting taken out in many cases. So that's another area. In terms of big cap tech, I've been telling people what's not priced this time around to really do fantastic that I'm actually more bullish on this quarter than I was last quarter. Microsoft. I I
Hmm.
I don't love it the way I like I really loved Google last report, but I like Microsoft probably best in big cap tech going into the quarter. I think risk reward. First off, see them doing business and not really messing up and doing well with AI and doing well with open AI and just signing another deal with Microsoft yesterday for like, excuse me, with Amazon
Google.
for like $1 billion
Amazon. Yeah.
yesterday.
Hmm.
So it's not priced for perfection anymore. I could see that one working. So that's some of what I'm looking at. I am not a fan of housing here. I think the housing stocks continue to go lower. I am not a fan of a lot of the uh, hotel names, a lot of the travel names. I think
Hmm.
that they're not all priced in for a slowdown. So I get why people hide in big cap tech, and I'll probably be one to hide in them, but it'll be very specifically. The other name that I'm long calls on, and stock actually, and I've been pretty bullish on for a while, and we did really well with is Amazon. I still think Amazon cut so much of the fat out between warehouses and finally firing people and not hiring people left and right, that
Hmm.
they might actually be ready to start to impress people. I think the shopper's holding up in terms of retail. I think AWS is doing well. I think all that crazy spending they've done, they've slowed down. And unlike Meta and Google that continue to outperform. The stock is off 50 some odd points from all-time highs and 15 points off recent highs. So I'd say Microsoft and Amazon a little bit more bullish than the rest of big cap tech. And then finally, I'll be long Netflix tomorrow. Undoubtedly, I'm out tonight, but you know, went up like 20 points. But tomorrow, I'll undoubtedly be a buyer and a pullback. I just see after this earnings report, as far down as it is, I see a move. It's not a great growth company anymore. This is not like those days are over. It's a mature growth company that's in the later stages, but I'm a big fan of Ted Sarandos, and it's a valuable company. It's not going anywhere, and it was a better than expected report. So on any pullbacks, I like Netflix a lot after tonight.
Okay, great. Okay, and so then on that, if we flip that question around, what stocks or sectors are you feeling bearish about, and why?
Hotels,
Oh, I mean, yeah,
travel.
you mentioned
When
it.
no, it's okay. But I'll go through it. They're really, I think, has a lot more downside because I really believe that this whole like economy and everything's coming back. I think it's abruptly about to finally slow. It's a bet. I think that we're not seeing the reports yet, but I think we'll start to see them. How did LVS do? I guess LVS is up to tonight. That's just I don't think the consumer is going to hold up great. So I would say that that's a spot. Financials are horrible. The charts are broken. They look disastrous. But I'm more of a buyer of big cap financials as they break down. So I'll be looking at MS. I'm just looking at some of the stocks at 72.
Yeah.
JP Morgan has to hold that 145 or else it can go a lot lower and go closer to 140. I'd be a buyer. But anything that has to do with the consumer spending right now, I'm not a big fan.
Yeah.
So I think we're going to have a slowdown.
All right.
Car rental companies, you name it.
Okay, so my final kind of topics here, we want to talk about this week's trading. We talked about IWM, and that might be your answer to this question, but or maybe Netflix. But I want you to tell me about the best trade you've had this week. You can zoom out past 7 days if you want. You don't have to just do these 3 days. And what made it go well?
I'm going to go with last Friday. Is that too far back or is that okay?
No, that's great. Yeah.
So there's a war. We had that amazing bounce where we were long. We took off a lot of our Qs into, I think it went 270, 271, 370, 371. And now Friday, I have hair in my mouth. Friday, so we have risk off, and it's a Friday. And I'm telling everyone, like, odds are it's not going to get a lot better. Don't expect a big bounce on a Friday in front of this war that's escalating. However, right, and I get it. A lot of traders are like, risk off, big down Monday, we're going to buy. And I walked everyone through. I said, that game ended like 10 years ago. Everyone who looks for follow through on the downside, it doesn't happen. It'd be nice if it was so easy, but those days happen less and less. So if you want to get paid based on the action this week, after getting a nice pullback from 371, 372, all the way back to, I guess it was 366, 365, I said, this is actually time to add risk onto the Qs. And I really like Amazon. So when everyone was going risk off Friday, I took a concerted bet. I said, Monday, we'll open up. I'm not saying that gap has to open up, but I actually don't want to chase them up Monday morning. And you don't want to be that sucker that risk off on Friday just to buy them back on Monday. I said, no, no real trader wants to do that. Well, unless you're a day trader. I get that. That's not what we are in so forth. So I said, I think it's time to take risk now. Can I be wrong? Sure. But if I am, then we get a much better buy. I'd love to be wrong. I'd love to have a great big down open Monday, but odds are we're going to open up because that's what history suggests. We opened up and we kept going up, and QQQ, TQQ, Amazon calls went up like 40%. And I'd say just that Friday to Monday trade was a really powerful one for us because everyone was kind of freaking out last Friday saying risk off, that bounces over. And I'm like, okay, I don't think so. So that was probably the best.
Great. Okay. And then on the flip side of that, tell me about the worst trade over the past week and what made it go wrong.
Absolutely. So yesterday, as Netflix is breaking down, got long. It was moving so fast, but let's say I got long, bounced 2 points, sold half, bounced 3 points, sold all, went back down again. It was frantic trading. But again, made a couple points. And now we're down at the 420s, right? We're at like 428 and the 429. And I own it about 428 and a half, 429. And I'm like, you know what? This is frantic trading. Why don't I wait for a better spot? Like, it's cute. I keep making $1 or $2. Now I'm down $1 or $2. Why don't I just, instead of this frantic trading, let it breathe and really see if it wants to put in a bottom? This is short-term trading. So I say, okay, 427, I'll stop out, drops out, goes to 424, and then never saw the light of day again and went up 20 points. I am a little pig-headed where I'm like, oh my God, I'm not buying this back now. So I was pissed. So rather than respond in a more thoughtful manner and say, put it in the bottom, it's time to be long, I said, I'm just going to be hands off. Now it came back in today, and yesterday's news was not a one-day event. Obviously, there's more to it. We saw the 8K and so on. But I missed about 20 points. So I was less than happy with yesterday's performance on how I handled it. Like, at the end of the day, I even made a little money on it, but the amount that I missed made it so I felt like I lost a whole bit of money. So that was by far my worst trade yesterday.
All right. Before we close things out here, I did miss an audience question. Phil, he said he missed the beginning of this. So he wants to know what you're now doing with Tesla. So kind of just repeat your take on the Tesla report, the stock, where you see things going.
So we talked a lot more about Netflix, and I said on Tesla, they missed all the numbers, but one, which is not, it wasn't earnings, it wasn't revenue, it wasn't margins. I forget the number they beat, but it was some small number. I have to look in the line item. And I said, this stock, though, is much more about pomp and circumstance. And I don't say that like in a negative way. I just mean it's going to be about how Elon presents. And I believe starts in 3 minutes. And it's going to be a lot about Cybertruck, how he's going to sell it, when he's going to sell it, what is the timeline? Is the fourth quarter going to be meaningful? Or is it going to be like we're going to see 10 on the road and like Santa Barbara, that some test drivers going? It's a lot about how he spins things. And then finally, if he says, that's it, like we cornered the market, he's not going to say cornered, but we are in such a strong place, I don't anticipate or expect any price cuts that are going to put additional pressures on margins, and we see sales above what you expect, and we actually see margins holding flat to expanding, then I'd get pretty bullish. Overall, I think it's an expensive company. I think it's a car company. I don't believe in the whole story, but I also want to stay solvent and get even rich if I can, I guess rich or whatever the hell I am. So my point is, I buy it all the time and I get long, but if he's asking like what I think it's a car company, but everyone drank the Kool-Aid, so I drank it with them. If the chart looks okay, and if we can get back over 256, I'd probably be long, and I even may play it tomorrow. But overall, not a huge fan. There's a lot of other companies I feel safer with. Caveat, it was my biggest position when it looked like it was going out of business. Me and my wife bought it between 100 and 110. Whatever that was, 6 months ago, a year ago when it got slammed. Here at 240, it's just a trading stock, and it'll be up to the conference call in my opinion.
All right. So looking at the next 2 days, we have 2 days left in the week here. What are your, I know you don't, at this point, it's like impossible to look ahead, probably even a day. But what are your, we have a lot of Fed speakers tomorrow. I think it's 6 that are on the calendar, including the Fed chair, 1, 2, 3, 4, 5 on the calendar tomorrow, including Chairman Powell at noon Eastern. So what are you expecting for the market at the end of this week?
I try not to overdo it on the charts, but the Qs keep testing this lower end of the range, 363, 362, where the 21-day comes in. We had a hard bounce off it yesterday. We get under there regardless of news flow. Then I'm near term, a lot more bearish into the weekend. Next, I'm going to key in on Netflix tomorrow. Does it hold the gains? If Netflix is up 20, but Tesla trades through its opening low and is down 20, then I'll nullify Netflix. And then finally, LRCX Lam Research, which I'm an old school guy, is one of the most important semiconductor manufacturers. There are semi-equipment manufacturers. Anyway, it's down a great deal in after hours. It's at 613. Looks like it's down 4 or 5%. That'll put more pressure on semi. So a lot of people, because they're looking at Tesla, they're not paying attention. it's actually going to hurt Nvidia probably and AMD tomorrow. So if we lose those guys, and if today there was this odd strength we saw in a few stocks like Microsoft and Apple. If we lose them, right,
Mm-hmm.
we're going to lose that 21 day on the Qs. And I think there's going to be some real downside, and we can revisit the mid to low 350s. And SPY's got to hold the 21 day, which I think is right below 430. So
Mm-hmm.
I'm going to be really chart focused and really see I really think Netflix and Tesla will tell us the story. The one thing I tell everyone, if you look over the past year, when Tesla and Nvidia are both down together, it is not
Mm-hmm.
spelled. They have led the market to the upside, and when they are both down, they lead to market. They are like the powerful twosome all year. As they go, so do the markets, and I think they'll be key to watch.
All right. Well, David Prince, thank you so much for joining me for this today. I think it was a really great discussion. Hope you have a great rest of your trading week. And thank you again.
Thank you all. And like I always tell Greta, thank you for doing this with me, because I don't make her life easy. Last minute, I'm like, can we change it to a different day? So anyhow, thank you for dealing with me, and thank you to everyone that joined.
All right. Have a good night.